maybe we'll see the Bitcoin move up higher based on the Nasdaq here, because with the Nasdaq here, we've got, say, wave 4 here with 1 and 2, and then we've got 1 and 2 to here. It's possible for it to have another little move here for wave 2 before moving up. But the point being is that we're in wave 2 to wave 3 here. So we're in the third of the third here. So we should see this push up here quite nicely. So that may be helpful for Bitcoin, but Bitcoin's been trending down as the Nasdaq's been moving up, which I kind of like, actually. I'd like to see them dislocated from each other. But at the same time, with Bitcoin here, we've seen we've been viewing this as wave 1 up here and coming back for the A wave and then a B wave. We'll talk about this in a moment. And then a C wave coming down here to this box here is the 50 and the 61.8% at the 25,000, as you may know. And yeah, so this is a little bit in here. One could say that it's a little bit complicated. Whichever way you go to look at it, all the boxes, it's corrective, but whichever way you would like to look at it, some of the boxes are unticked in terms of the best way to label this. So I've just been looking at both ways, and one of the ways is having this here as the A, the B, and the C wave here for the B wave, and then 1 and 2 here. And then quite clearly here we can see we have 1, 2, 3, 4, 5, so that's cool. And then we'd be going into wave 4 here at the moment. So the wave 4 can pull back 38.2% or to the wave 4 of one lesser degree. And here we could view this as the little A, B here, and then 1, 2, 3, 4, 5 having that top in play there. So it's possible for this to have another leg down here. We could also look to have wave B over here, and we could look at this as an A wave here, a B wave here, and a C wave over here. There is overlapping wave structures within this, looking at it as a C wave here for that. So there's issues there, but if that was the case, then we would have the B wave here and the C wave sitting right here, and that would be the low at this point. And we know there's good support here as well because of all of this over here. We're in minor group 2 to talk about the trading levels. We've got a medium level here, minor group 2, and major level 3 here. So are we completed? Are we done and dusted here or not? Or do we have one more move down? Look, I think the story is still open, and we'll just need to see. Now, if I took this situation from this wave 2 here down to wave 3, I'm not that keen on spikes, but I'll use that low there. We can see the 38.2% retracement level comes in here, which is fine for, you know, it's at the 40%, shy of the 50%. But we could say that, well, if this, and it does look like a little A wave here and a B wave here, which you could also look at as wave 1 and 2 here. So there's different ways to count this up here, but we could say that, well, if it moved up here, that's probably starting to look like more of a bullish move at that point. So what we normally do, the top of number 8 here, we would look for the first high above the level here to go long on, and then we'd look for the second high here and bring that down to the second high at that point to go long on at that stage, and then we can move in at that point there. It's either this or this. I want to have a look at the futures market here. So with the futures market here, the CME Futures, we can see that this particular bar that came down here, this is a weekly, by the way, we can see that this bar that came down here was on quite high volume. And I know it's only Tuesday at the moment, but the move up here is certainly on lower volume than the previous day. So really, the sellers are still in control at this point, you know, based on what we can see reading the volume bar for bar here. If we go in here to the hourly chart and just have a look at, you know, the intraday pattern as we just did with the other charting program, here it's a slightly different, same, I guess, in a way. But here, there's a couple of things here. We could look at this here as well, down here for the A wave here, then an ABC for the B wave, and it does look quite impulsive here, doesn't it? So we could look down here as wave 1 here, and 2 here, and then 3 to here, and then 4 to here. Yes, there's overlap here, and then down for 5 here. But in a way, we have got an A wave, a B wave, and a C wave down here. Not of primary degree, but we'll just, where are we in the other one? We could probably go in here on this. So something of this nature anyway, as 1, 2, 3, 4, 5. So that's kind of interesting. But I think to draw a line in the sand, the 28 here was the support, and then it retested as the resistance here. So I guess in one way or another, to have this as support again over here would be the right way to go about doing that. So support on the 28 would need a classic trading levels pattern. So it would need the arrival, the reaction, the first high above the level. That gives us our reference point. And then we can go long above that. We can drop it down to the second high and then to the next high over here. You can work an impulse wave up here. There's so many ways to refine and improve this particular pattern. There's only 3 patterns that can happen at a level. Really, it's this one here. The variation on this one is that it doesn't drop below the level here, but because we use that reference point here, that's the point that we go, oh shit, we got to get on this. We can get the second level here. That works as well. So sometimes it doesn't come down below here, but it's not as common as this one's the most common pattern. And then the third pattern is where it doesn't actually stop here. So if you ever see a market that doesn't stop here, that just plows straight through that, just wait, because it will end up folding back. And it's this one here when if you have a look at the volume, you'll see the volume diminishing as this moves up here. And normally the distance it goes above the level will be the distance it goes below the level. And the level will become the balance line for the particular correction that you're involved in at that point. But it still gives you the top high, the second high, and the third high here. And you can work it from over here if you get impulse waves. And like I said, you can improve things at that point there. The new TradingLounge website is still probably a good 3 weeks away. We've done the stock portfolio. We're just working on the crypto portfolio, and we'll be putting trades out on that crypto portfolio. And myself and Kitty Upon will be looking. We want to check each other's trade. So we've set up a process for that. So there will be a double check on all trades that go out. And once we've been up and running for a little while, I'll put an API on that portfolio that will enable you to just click on a trade and send that through to your own broker, so to speak, be it Binance or any of the others. Will cover most of them. So we'll have an API that can just send the trade straight through for you on that. Okay, so that's that. So yeah, look, just coming back to this here. We've been in the waiting game. We knew that we were, when we got up here, we knew we were here when we had this 5 waves here. We knew we'd have some sort of 3 wave here. We've got it. It's a bit scruffy, put a bit of a spanner in the works, and people will have it counted differently, and it doesn't really matter. It's the end over here that matters in a way to prove it, to move up. Did that? I'll just go back to this. I just want to see if the futures market had a gap on that there. Oh yeah, so that does have a gap here on the futures. So that may get covered. We got this one here, which is always sort of handy. We've still got this one here too. So it doesn't really want to cover gaps that much, does it, on that level? Covered it here. Just go back and check. I know there's some gaps in the bigger picture of things. Got one that's been covered. Okay, so there's, yeah, hopefully. Well, that'll be interesting to see. We'll keep an eye on those there. Alrighty, I'm going to leave it at that. So we'll pick this up tomorrow, and we'll see where we're at with this. But if you do take a trade here, also look to add on the 29,000 here as well on the way up. So on the 29 on there, and then we could also start building on top of the 30 there as well. That's what we'll be looking at. And basically what we'll be doing is building on the 30, the 31, the 32, and the 33. At this point here too, if you take this trade here, you'll need to leave your stop under the low here. Once that gets triggered, then you can bring your stop to this low here. Okay, because that will be 5 waves at that point once that gets triggered, and that way you're halving your risk. So if you're taking a part position here and you've allowed the stop to be here, then once that gets triggered, then you can halve your initial risk, which should be about 1%, and bring that up to this point here. So then you've halved your initial 1% risk into 0.5% at that time. Now we can't really move it from here, right, until the 30 becomes the tested support. So if you're going to add another position here, you can't move the stop up to here. All you can do is just take money off the table, because it will be, we'll be getting corrected at the 30 here, but it shouldn't be too much. At worst, it will come back to the 28 or something if that's going to be the case. So you'll have to leave your stop here until the 30 becomes the support, and then after the 30 becomes the support, we have to leave the stop under the 30 until group 1 up here becomes the tested support at that point. So just give that a bit of thought and how you'd like to add things. So basically what we're doing, we're just adding at every $1,000 here, and we're also just verifying and checking the wave count and a few other things along the way. Alrighty, I'll leave it at that. Cheers.